Hey everyone, my name is Tim, and today I'm going to be going over an analysis of the Invesco KBW High Dividend Yield Financial ETF with the ticker symbol KBWD. It is a monthly paying dividend with a high dividend yield, but there are more to ETFs than that. So I'm going to start my analysis here on the Seeking Alpha website. It's a site I use to do part of my research on stocks and ETFs. For the year to date, it is down 31.05%. Given how 2020 has gone so far, that's not really that surprising. But you can see back in February and March, this ETF was going for over $22, and it's right now at a little bit over 15. And it does have a expense ratio of 1.58%. This ETF was created on December 2nd of 2010 by the Invesco Group. The Invesco KBW High Dividend Yield Financial ETF is based on the KBW Nasdaq Financial Sector Dividend Yield Index, and the fund generally invests at least 90% of its total assets in the securities of publicly listed financial companies with competitive dividend yields in the United States. This ETF is allocated in several ways. It's got 11.20% in mid cap value allocations, 80.70% in small cap value allocations, a 7.13% in small cap blend, and 0.98% in small cap growth. The top holdings for this ETF is Apollo Commercial Real Estate Finance, TCG, BDC Inc., Orchid Island Capital, FS KKR Capital Corporation, the Apollo Investment Corporation, Prospect Capital Corporation, BlackRock TCP Capital Corp., New Mountain Finance Corp., Armor Residential REIT, and Annaly Capital Management are the top 10 holdings, and there are about 41 holdings in this ETF. Those holdings break down to 68.31% in financials, 29.18% in real estate, 1.89% in industrials, and 0.62% in cash and bonds. KBWD's focus on high dividend stocks tilts its portfolio materially away from the broad financials market. It excludes industry giants like Berkshire Hathaway, Wells Fargo, and JP Morgan, which make up sizable portions of our segment benchmark, in favor of smaller companies offering bigger yields. It follows that KBWD tilts much smaller than our segment benchmark. Its dividend-centric strategy also leads to massive sector bets as it underweights insurance companies and loads up on REITs and private equity. KBWD has sufficient liquidity to meet real investor needs, although daily volumes can be sporadic and bid/ask spreads are workable. Investors may find it more difficult to trade KBWD in size. The fund's eye-popping fee is a regulatory illusion. It's required to report the operating expenses of its private equity holdings as part of its expense ratio. Real-world holding costs have been consistently in line with KBWD's very reasonable management fee. This ETF has a dividend yield of 11.24%, which equals 0.1152 cents per month, for an annual payout of $1.70 per share, with a 5-year growth rate of negative 2.08 and 0 years of dividend growth. To date, the 5-year growth rate is at negative 2.08%, a 3-year growth rate is at negative 1.74%, and the 1-year growth rate is at negative 7.82%. This ETF has a price to earnings ratio of 20.45, a forward price to earnings ratio of 12.35, and a price to book ratio of 1.17, which means it's slightly undervalued at this point. So if the stock market increases, there is a very good chance that it could go back up to $22 where it was at in February and March. Though ETF.com has the price to earnings ratio of this ETF at negative 6.58 and a price to book ratio of 0.76, which means it's still undervalued, but the price to earnings ratio on the ETF.com is worrying because that means that they're losing money. This is one of my investment accounts, and you can see that I myself have 15 shares of KBWD. It has got me a gain of $20.44 since I bought it. It is now at $15.12, but I bought it when it was $14 or so, so the 15 shares cost me $206.50, and now it has a market value of $226.94. So for some information as well as a little bit of fun, I have an TD Ameritrade income estimator for a dividend stock or ETF. So you can use it to estimate how much of a stock or a number of different stocks you would need to get to a specific income. So for instance, just looking at KBWD, the default minimum is 100 shares, which right now has a market value of $1,512, which gives you an estimated annual income of $170.12 on $14.18 per month. Now, just for some fun, if we were to change that to 1,000, that gives you a market value of $15,120, an estimated annual income of $1,701.18, and a estimated average monthly income of $141.77. So that means in order to get to the golden $1,000 per month in dividends, we would need to get this to about 7 or 8 times more. So let's try 7,500 shares. Nope, that's a little bit high. So try 7,300. Nope, a little bit too high still. Okay. So we'll go with 7,100 shares, which has a market value of $107,352, has an estimated annual income of $12,078.38, with a estimated monthly income of $1,006.53. So that's how much you would need to invest in KBWD just on its own in order to get to $1,000 a month in monthly income from dividends. And if you reinvest, that would just increase this very, very quickly. Thank you for watching this video, and I hope my analysis helped you make a decision about this ETF on whether you want to invest in it or not. Hope you have a great day.